Hey there, welcome to the channel. So today was a crappy day in the market, and we're going to take a look at that. And as well as we're going to look at what's going on with the dollar rising and interest rates going up. Something kind of weird going on there. All right, so starting out, if we look, Amazon reported last night. They reported dog poo on a stick. So they got beat up. And, they basically lost margin apparently. And they also reported just, not good, whatever, not good numbers and everything. So they're down 14% today. So this, of course, led to the Qs taking a beating today. So the Qs, of course, very important. It had kind of held this low. It was holding it until today, this low in this area, and it broke below that. So that's really what a mess that's going to be, because that just, it broke through. Now, the only thing that you can say with this is that the good thing is that it's so oversold right now that maybe it'll have some kind of a bounce, but the RSI on the weekly hasn't hit there yet. I'm sorry, on the daily hasn't gotten to the oversold yet. So maybe it's going to break and go lower. So I actually have a little bit of Qs just because I bought some, and I'm kind of thinking that's probably a mistake. So yeah, the Qs are kind of dog poo on a stick right now. That was not good. And look at this bar on the SPY. Look at that outside bar. It's just a really strong outside move there. And what it did is it's, now it's below this recent lows here, not below this one, but it's really making a move at it. So yeah, that kind of stinks. So let's look at what are oil is still coiling right now. Our 10 years still kind of pushing up, not to the 3% yet, but kind of trying to get there. And if we kind of look at our USO here, yeah, USO is still kind of coiling. You see it is kind of just still coiling up like that. And we look at our wheat fund here. So, this is an interesting one. So looking at the wheat, which is this ETF, tries to follow wheat. You see an interesting thing here. It looks like, and we'll see if it really gets confirmed, but it looks like it broke below this triangle. So depending how you draw these things, whatever, but it looks like it might very well be making a breakdown. And then, the next support would be maybe at the 950 level. So that's kind of interesting there. I don't know what you can do about it to trade wheat or whatever, but that's what I see there. Okay, so now what I want to do is I want to look at something here. So I was listening to George Gammon, and he had on Brent Johnson, milkshake theory guy again. So milkshake theory, his view is that there's all this dollar denominated debt out there in the world due to the euro dollar system, and the point that he gets at is like there's going to be demand for dollars to make payments on all this debt and secure all this debt, and that there's going to be a shortage, and hence the dollar is going to go up. Now, so that's kind of his theory. So one of the things that we could do is let's just look at what's going on with the dollar now. And what I'm going to do is really go out to a very long chart here. Okay, that's too long. That's just a little too long. So let's go out to this one. Yeah. So now we're at a year and a half long chart here. And if you look at this thing, you can see that here's the dollar, came down and, kind of put in this W, and then it broke above this W, and it's been going up ever since. And matter of fact, it's getting kind of almost, almost a hyperbolic move. So that's kind of it. Looking at the chart, it looks like the milkshake is in play. That's what's happening. Now, let's look at, if you're buying a currency, so if you're buying dollars, normally you have to do something with the dollars. And one of the things that you would do is typically in the past, they would recycle those dollars that they get, buy the dollars, and they would recycle them into treasuries. So normally that would create demand for treasuries. But looking at the yields, which are the inverse of the price of the bonds, right? The yields have been spiking over all of 2022. You have this huge move up in them. So basically what's happening is the price of bonds are dropping in spite of the fact that the dollar is going up. And we could look at this, we could use as a proxy TLT, which is our bond. And now we're looking at the price. So basically you can see here, hey, for 2022, price of bonds are dropping through the floor at the same time that the dollar is going up. So what is happening here? This is would be kind of be very unexpected to me, because it's like, okay, I would expect them to move together. So let's look at, I created this other chart. Now, what I have here is I have in the candlestick chart, you can see that the blue red line, that is your dollar. So you can see that the dollar is moving up, and I've got many years here. This is going back to 2011. So you can see this huge dollar channel of this thing moving up. And then the zoomed in part I showed was this last part. But you can see very often that, you know, sometimes they're kind of doing stuff, whatever. And then, or I put the TLT. So the TLT is the thin purple line. So like over here, you notice that, hey, the TLT is going up, bond purchases or bond pricing is going up, indicating demand at the same time that you have the dollar going up. And then you have periods where they kind of meander around, but there's this general periods where, you know, the price of the bonds are going up at the same time, especially in this period of time in 2018 to 2020 here. And then you can see over here that when the dollar goes down, that the yields go down as well. And there's some kind of a lag there. But what you see at the very end here from February, look at this divergence. This is a huge divergence. You see that the dollar spikes up, but at the same time that the price of the bonds has just dropped off the floor. And this is for really just started to happen in, I would say, you know, in February of 2022. So what's going on there? So the implication is that, yes, there's a lot of demand for dollars, but those demand for dollars are not translating. It's not translating into demand for the treasury bonds. So let's look at this. One of the things we could look at is the Fed's total assets. Now, what has happened is we know that the Fed has backed off on their purchases, and now we're in April, and they should have backed off to basically zero. And you can kind of see that. You can see that their balance sheet is going up as they continue to buy treasuries, basically buy treasuries, buy mortgage-backed securities. Those get plunked on their balance sheet. They were buying them, but then you can see over here in 2022 that the slope drops off, and they've dropped this to zero. And you can see that the increase has dropped off to very slight. And this period of time seems to correlate, and I'm going to try to do this if I can. Let's see. Yeah, so you can see that this drops off. And so here you see February, right around February and March, you can see that the rate, especially in March, right? In March, you can see that, matter of fact, the balance sheet is almost starting to drop. It's flattened out here. So if you look at that, that's what appears to be happening. The drop off of demand from the Federal Reserve. They're not going out there and every week buying the treasury bonds. As a response to that, what you can see is that the price of those bonds has dropped off a cliff, and that has caused our interest rates to spike. Price goes down, interest rates spike. So that's a very interesting kind of dynamic there. And I'm going to do one more thing here. I am going to zoom into this thing, and I'm going to go to the daily, and it's going to be a very noisy chart. But what I'm going to do is try to zoom in even a little bit more. Yeah, you can see it right here. So once again, reiterating, you can see right here in February and March that when the Fed terminates that buying program, you can see that the dollar, even though the dollar is coming up because the milkshake theory is going to full gear, that the price of the bonds is dropping off. Now, there's two things that are happening because the price of the bonds are dropping off. The yields are going up, as I was showing earlier. So now looking at this again, we can see the price of the bonds in the purple are dropping off a cliff. And I believe it's because the Fed stopped buying them. The dollar is going up, but it's also because the price is going down, the yields are going up. So now you have this dynamic. It's a very interesting dynamic because basically the Fed action to taper their bond purchases has caused the demand for the bonds to drop off. At the same time, this has caused interest rates to spike. And the additional effect is that this has also caused the dollar to increase. If you compare rates for bonds, other Euro bonds and stuff, a 2.7% interest rate on a 10-year treasury is a very good rate. For many of the other countries in the world, that's a very high rate. So I just found that very interesting because you look at this chart and I just have not seen any cases where you see this split where the dollar is cranking up at the same time that the treasury prices are dropping through like a stone like that. So I think that's it for this one. Talk to you later.